What's going on, everyone? It's Jay the Trader here. I trade contracts on Twitter, stepping out of my comfort zone, bringing technical analysis to Twitter as obvious, but showing my face now. I've done a lot of technical analysis, a lot of charting, a lot of plays and everything. Never really showing my face, but this is the man behind all that work that's been being put out. So in today's session, we're going to keep it short, simple, and sweet. Not going to try and do anything too crazy. We are pretty much going to be going over SPY, setting up our watch list for it, and creating a game plan for Tuesday and the rest of that week. I initially already set up a game plan, but what I'm going to do is I'm going to just get rid of all this, and we're going to go and start from scratch. So let me just move my screen real quick. Alrighty. So what I'm going to teach you guys is a method, a strategy, which is in the same family as quantitative trading. What quantitative trading is a style of trading that involves algorithmic and mathematical equations to get price actions or to gauge trend and get price target. We are going to be using that same approach on SPY. We're also going to be using that same approach on ES, SPX, and NQ. However, in today's video, it's going to be short, simple, and sweet, and we're just going to really go over SPY and use that. So with this strategy, you don't need any indicators. The indicators just help you give you that extra confirmation. You can just use raw price action. You can literally just use raw price action. So for right now, what we're going to do, step one, is you need to identify your trading range. You can have your Fibonacci's that'll help you identify these ranges a lot easier, or you can use your naked eye and gauge the range. The sweet spot that I have found these ranges to be found on are the 1 hour through 4 hour time frame. Now, right now I'm on the 4 hour. If I flip to the 1 hour, you can see that it gets a lot easier to identify a range. If you can't do it with your naked eye because you just don't know how to chart, which a lot of you guys that are watching this know how to chart, so gauging price action shouldn't be anything too hard. All you're looking for is where did price bottom out before bouncing multiple times, and where did price reject before selling off multiple times. Looking at this right here, I do have a 10 and 20 Fibonacci open, and that 10 and 20 Fibonacci, which is right here, I'll hide it, pull it back up. It's showing me that there is a Fibonacci level right here at 475.90. So I will go and I will identify that Fibonacci there. And what I'm going to do after identifying that is I'm going to make that my top range. That'll clearly be my top range. So 475.90, I'm going to make that about yellow or orange, and that'll be my top range. So you can also identify that in text if you forget. And now we're going to identify our bottom range. It seems like price, just from my naked eye, bottomed out at around this 468.83 level. So I'm going to go look for that and identify it. Mark that as bottom range. And then boom. So now we have our top and our bottom range identified. All right, so step one is complete. We found our trading range. Congrats. Now, what's next up? It's very simple. You're going to use a formula, which is basic addition and subtraction, but the formula is pretty much top range minus bottom range equals IMV. IMV is implied move value. So you're going to take your top range and you're going to subtract it. Okay, you're going to subtract it from that bottom range at 468.83. So 475.90 minus 468.83. That gives me a range or an implied move value of $7.07. So step two is complete. You've subtracted the top range from your bottom range, and you've gotten an implied move of $7.07. Now, your next step is where the math comes into play even more. You're going to take that same value, that IMV, and you're going to add it to your top range to get your mathematical target high. or your mathematical target to the upside, right? So 475.90 plus $7.07 gives us a mathematical high of 482.97. So what I'm going to do is I'm going to look for that 482.97. I'm going to identify it, clean it up. I'm going to mark it as green. Text that I'll be top IMV target. And now we're going to take that same value and we're going to subtract it from our bottom range. Okay, so 468.83 minus $7.07. That gives us 461.76. So I will go look for 461.76, identify it, clean it up. I know I did that one sloppy, but I'm going to just clean it up. Make that red, and that'll be bottom IMV target. Boom. So there you have it. You've identified your top range, you've identified your bottom range, and you've done your formula to get a implied move value plus or minus from that range, which is $7.07. Now, with that $7.07, you added it to your top range to get a mathematical high of 42, and you subtracted that $7 to get a mathematical low of 461. There's multiple ways of playing this next week, and I will tell you all how. This is free game. I'm literally giving you guys my sauce here at this point. Now, the safe way to play this, okay? I'm going to talk about the safe approach first. The safe approach as to playing this setup is waiting for that top range at 475.90 to clear. Once you can get that 475.90 to clear, you need to wait for a retest at that 475.90. You will get it, okay? Once you get that retest at 475.90 and that retest can hold, you then will look to play the long side. Why? Well, because you're mathematically holding that top range at 475.90. You've gotten out of that trading zone, right? That people call it a no trade zone, but you've gotten out of that range, broken above to the top. If it holds, that breakout could happen, mathematically taking you to that 482 because it'll be taking into account that $7.07 implied move. So I'd be playing calls if we broke above 475.90 and held above that. My target will be 482.97. There's multiple ways of playing your strikes, okay? If you want to be your much safer approach, right, with a realistic strike, you can always take a 475 call or a 476 call. If you want to be a little bit on the riskier side as far as like, okay, let me see if math really works and I get my target, you can shoot for that 480 to 482 strikes. Ideally, I'd probably shoot for the 480s, but you don't want to go no less or no higher than 482, in my opinion, at least. 483, yeah, but 42, no higher than that, because you're still keeping it realistic within that strike price as far as if price breaks above that top range, mathematically, that 482 target can still go in the money, giving you about 97 cents more of that extra premium juice, right? Now, if we break under 468.83, and again, this is still the same safe approach. We're not talking aggressive yet. If you break under 468.83 and you cannot break above it and you hold under it on the retest, you can either play the 468 or 467 puts. Okay. You want to buy at least a week time. You need time. Sorry. Or if you want to be a little bit riskier, you can hit and tap those 462 to 461 strikes and get those to juice up in premium, and, turn a small investment into a big return. So you have multiple ways of attacking this from a safe aspect. Now, if you want to play aggressive, to my aggressive traders, listen up. If you reject under the top range and can't get above that said top range, okay? If you can't get above that said top range, price will fall and try and test the bottom range. People ask 475 to 468, you're crazy. I'm not crazy. That's what the market is telling me, okay? Look at what happened here. Couldn't break above the top range. Again, there was no news that hit this market. There was no news. no news, but we fell from 475 to where 468 around there. I mean, fell a little bit lower to 467, but eventually got right back above 468 and opened up above there. It's I don't make the rules. That's how this works. Now, mind you, they could have easily sold this off a lot more, but they decided to hold it above that bottom range towards that close of the market. And what happened in the next day? Well, we played the bounce 468, and what we're looking for was 475. But essentially, yes, you couldn't break above 475 top range, so it's right back to cycle or phase one, and that is to test the bottom range. So for my aggressive traders, again, if you don't break above that top range at 475, you have a pivot around 473.90-ish. Okay. That pivot, for those who don't know, if you get above this pivot, buyers will step in. Below the pivot, sellers will step in with force, because this has clearly been an area of interest as to where that's where the sell-off started, so on and so forth. So if you break under this 475.90 and get under 473, you are safe to short. Your target would be 468.83, the bottom range. You would have a little bit of pit stops to go before you get there, and that's just your pre-market high and pre-market low levels. Okay, so right off the bat, if you were looking short below 475.90, you'd already know at this point in time, right? It's under the pre-market high. That's bearish, so to speak. It can test pre-market low. Now it broke another pivot. Okay, so now if you were to be short, you would want to see the break under pre-market low, and that's how you know your short is now going to cook and go into your favor and go to 468. If we got to 468, say prices at 468 and held 468, my aggressive traders, listen up. You play longs if that level holds, and your target would be 475.90 or that top range. You will obviously have pit stops to get through, which you can trim at, or try and see if you can ride through it, which would be your pre-market low and your pre-market high. If you can get above those, you'll get that target touch. Now, I tell traders all the time, if you're going to be aggressive, don't get any greedier than those ranges if you're playing in between those ranges, because if you don't get the break out of that 475.90, right back to phase one, retest of 468. And if you don't, if you're trying to go long, or if you're trying to short at 468 and that doesn't break under, it's going to go right back up. So if you were playing long at 468 and you targeted 475, I would exit there. That's a good return, in my opinion. That's a very healthy return. And anything above that is just getting greedy. What I would do is I would exit 475, and then I'd wait for the break above that top range if we get it. And if we get it plus a retest, I will look at that as continuation on the uptrend, and then get back in at either 476 or 480 call if I don't want to put up too much premium, and ride the move to potentially 482.97 mathematically. Same thing for the downside. If we break under 468.83, right? We can't hold above there. Again, I'm just going to play the shorts to 461. I'm not going to listen to what anyone says. People say, well, wait, Jay, 468 or 461, that's a crazy drop. Yes, it sounds crazy, but look at all this price action that happened here. This is like weak volume. This can easily be sold into, right? That's if we broke under. So that's my game plan for Tuesday and pretty much the remaining of the week if we stay within this range. I tell everyone this all the time, okay? Men lie, women lie, numbers don't lie. If you think this strategy doesn't work, I implore you sorry, to, back test this. Go look at different ranges, not only on SPY, but on the Qs, on ES, on NQ, on any ticker. Look at, identify those ranges and see, okay, based on that range, did that mathematical move happen? Based on, if the top range or the bottom range broke. So again, I hope this strategy helps you all. This is literally what I use to take day trades if I really want to play aggressive. This helps me swing trade if I really want to, capture those big moves. And again, finding that range on a 1 hour to 4 hour time frame is beautiful, because I'd rather trade, using those bigger price targets so I can, again, capture those bigger moves. I don't really like to scalp. I don't really like to push for only $1. I like to get at least, $3-4 out of a move, maybe more if it's there. But again, I hope this helped you all. Be on the lookout for more videos with my face and everything. If you all have any questions about this strategy or about SPY or futures, be sure to hit my DMs. They are open on Twitter. So yeah, I will see you all in the markets. Take care and stay blessed.